child support came for his refund on a child that the wife didn't know he had. So
Well, gotta go. This has been nice, Jeffrey. It's episode 6. We back. Ladies First podcast. It's going down. Now today, Nicole and we're joined by a tax expert of 20 plus years. We got JB, okay? Jeffrey Blackwell is here. He's so knowledgeable and he is here to dissect the true price of success. Now, granted, I could go on and on and on about my man, my man, my man, my man. Okay. Because by the way, he's also my husband. Okay. When we thought about this episode, I said, God, who could we call? Actually, I didn't. I knew who to call. Okay. This is the numbers man. He the man with the plan. All right. So for today's episode, it's inspired by Kendrick Lamar's How Much a Dollar Costs. And I mean, we're in the thick of it in 2026 tax season. I mean, it's also March Madness. Ooh, the way the world is going right now, it's just a lot going on, okay? Also with the Big Beautiful Bill Act and why your ego might be the most expensive thing that you own. So welcome, JB, to the podcast.
well,
So I
well,
want to go
thank
ahead
you.
and get started with you. You're welcome. I hope you feel welcomed and all the
I
things.
feel flattered. I'm flattered.
You're welcome. You're
Thank you.
welcome.
I'm flattered.
You're welcome. Thank you. So I want to go ahead and get started. So tell us, give us a background, of course, of who you are. Granted, I know you very well, but the viewers don't. All right. So I'm sorry, Nicole. I'm sorry. I said I
No,
was going to behave. I'm going to behave.
I know you very well. Do I need to excuse
She just,
myself?
You
she
don't need to
just.
excuse yourself. I'm going to behave. I'm going to do well. So please let us know, how did you get into, of course, being an accountant, your love of numbers? Take us back down memory lane. Mm.
Well, that's interesting because to be 100% honest, my major was chosen for me by my father. He was one of those people. He said that if he had to write a check for to a university, then he was going to tell me where I went and what I majored in. And so because I didn't get a scholarship. I had partial scholarships, but because I didn't get a full scholarship, then that meant I had to go where he told me I was going, and I had to major in what he wanted me to major in. And that kind of ties into what we're talking about today. He knew the value of his dollar, and he wasn't going to waste it. And so he steered it. And in the beginning, I didn't like accounting much at all. But then once I began to understand the practicality of it and how everyone needs to have some accounting knowledge in order to be successful, that's when I began to realize that my father didn't make a mistake in doing what he did. Yeah. But yeah, so I wanted to be an English major.
Wow.
Well, hold
That's
on.
a
I
Yeah, I
want to
wanted
ask
to.
about
I
the
wanted.
English major, but so what university did you end up going to?
Well, I mean, it's funny that you should ask. My freshman year,
come on,
I
Prop.
had this out, and I didn't realize that I was going to have to put it in your face, Nicole, because I know where you
Wait a
went.
minute. Whoa, time out. You married an eagle?
I married an eagle. I'm sorry.
When, when were you gonna tell me this?
As a matter of fact,
I don't know
I
what
kind
to
of
do.
feel inclined to put it on since we're gonna
I did
talk
not know.
about
Like, I
this.
really didn't know. I thought you went to Alcorn State or something. You're
I
an
went to
eagle?
Fayetteville State, and I went to.
Nicole said we're
That's
shutting this
Now
down.
you got to look at this for
We're
the rest
shutting
of the
this down.
podcast. I know how much you enjoy it.
Nicole said we're shutting it off.
For,
We're shutting it off.
for context, people. So I went to an HBCU. I think we established that in episode 1 with my HBCU educator.
Yes.
But I went to
Yes.
the North Carolina Agricultural and Technical State University.
And
Aggie
you know what's
Pride.
funny about
Aggie
that?
Pride. So we are
No, let me.
sworn
No,
enemies.
but listen, my father was an alum of North Carolina Central University. I was accepted to A&T. My best friend and I were going to be roommates. 210 Alex Haley Hall. We'd already had our room assignments. And I
Yep.
told my dad, I was like, Dad, it's time for me, to report to school. And he asked me. That's when he asked me the question. Where you going? And I said A&T. He said, "Did you get a full scholarship?" And no, I said, "No, I got some money, but they didn't give me a full ride." He said, "Well, if I write a check, I'm not writing it to A&T." That's what he told me. And so then, I mean, he was definitely an evil. So then I was like, "Well, Central started last week." I said, "Central started last week," and you know what he said? He said, "Well, then that means we better hurry up and get up there." Now, what I didn't know was that the chancellor at the time, Julius Chambers, who was a civil rights attorney, and my dad were roommates in college.
Wow.
They both went to Central in the 60s. And so we go straight to the chancellor's office. I'm mad because I feel like dad is trying to control my life, but he knew the value of his dollar. So he took me straight to the chancellor's office. The chancellor did my advisement and everything, and I was sitting over there mad. He put me in the chancellor's program, put me in the honors dorm. I didn't have to stay in Chidley, Maine. I stayed in Rush Hall, which was the honors dorm. It was co-ed, girls upstairs, boys downstairs, and I was still mad about it because I wanted to go to A&T and I wanted to major in English. But he told me I was going to North Carolina Central, and I was going to major in accounting, and that's how I got to major in accounting. I was hard headed though, but he didn't make a mistake.
So you
At
you
all.
wanted to be an Aggie. Okay, I'll give you that. I'll give you that.
Well,
How you
But
yeah,
no,
say,
I
only
would
thing
feel the
is
same way.
Nicole?
If my child, if I'm an Aggie, alum, right? If my child wanted to go to Central, absolutely not. Absolutely, I would do the same. So I
right.
understand. I understand. Now,
Yeah,
English
so
major
that's how it
though,
was.
what did you want to do with that?
English, I wanted to write. I always wrote. I wanted to do creative writing more specifically. I didn't want to do the whole English literature,
Right.
Shakespearean and all that. No, I wanted to go English and do my MFA in creative writing, and I wanted to teach on the college level creative
Got
writing.
it.
That's what I wanted to do.
All
Yep.
right. Sorry, we went on a
Okay.
side tangent.
Well, no,
Let's.
you asked. That's me. So anyway, I fell in love with accounting. Well, I mean, accounting is one of those things that you have to love. It's not even whether you fall in love with it or not. It demands that you pay attention to it and you grow with it. And so once I got into my major and I understood, like I said, the practicality of it and how useful it was one of those things. And then I pretty much understood it pretty well enough. I wouldn't say I was the best, but I was hardworking, and that makes all the difference.
Mhm.
Yeah.
Now,
All
you said
right.
something earlier that made me think. Like, how do you feel that the tax preparer framework has changed over the years?
It really depends on who you are as a client. There are some clients who would prefer that they have a CPA do their taxes, and they may need a CPA depending on the breadth of their financial situation. They could have investments, they could have property, they could probably have an LLC or a nonprofit and have all these things that they have to do that require someone with some I guess you could say culpability to make sure that it's done correctly. A certified preparer that also can do the supporting reports and work papers to make sure that everything is done correct. And then you have some people who just, they work the job, they got a W 2, they might have some interest from a bank account and maybe some other, I could say main things, and they don't need all of that expertise. And so then they can go to H&R Block or they can do it themselves. Well, I think if you go to TurboTax, you're really doing it yourself because you got to enter everything. But
Mhm.
these are people that will do that. And then you have some people who want a personal touch. And so they may go to a tax preparer, someone that they know, someone that they don't mind sharing all of their financial information with. You can do them yourself. I've seen that, but you run the risk of making a mistake. Not necessarily not knowing what you're trying to do, but actually making a mistake, because a lot of stuff is interpretive. Meaning, there's more than one way to report certain types of income, and then there's different ways and different methodologies, and I guess you could say arriving at certain includable costs to offset income. So, like if you're talking about depreciation, it's like I mean, there's a lot of depreciation methods that you can use depending on what your tax strategy is. And there's another thing, you have to have a tax strategy depending on how much money you're talking about. You need to have a tax strategy to go along with your investment and your earning strategy. I'll say, for instance, like if you have a business, and I know I talk about different types of business all the time with you, Tara, but if you have a business that you know is going to grow in years 3, 4, and 5, but you have all this front end cost of setting up,
Mm-hmm.
you may want to push some of the costs to match some of the earnings. Because if you take all of these costs in this year, it may not benefit you from a tax standpoint to write off certain costs in years 1 and 2 when you're not really making the money that your business is primed to make. So then you want to be able to write off some of that income in the later years. So there's different methods of depreciation and cost recovery systems that you can use to apply those costs to earnings that are gained in later years of your business. And so this is what you get from a personal tax preparer or as well as a CPA, someone
Mm-hmm.
that understands that, motion, your financial motion has to be managed
Right.
so that and there's an accounting principle that you match expenses have to match revenue. So sometimes people are expense heavy in the beginning and revenue low, and then they're revenue heavy and expense low in the end, and they didn't even adhere to that matching principle, so they're not reaping the benefits of that whole enterprise. You never look at your business 1 year at a time.
Mm.
You look at a business in the range of your assets. So if you have a business that has mostly 5 year property, like if you're in the car business, then you want to give yourself 5 years to move your expenses and your revenues around. But if you're in the real estate business, or I could say property management, and you own properties, now you're talking about 27 years depreciation. You're talking about
Mm.
moving those expenses and that income around to match the revenue of those assets. And especially when you're financing a home, let's say you could be in real estate and be financing some of the properties that you're renting out. Well, you know that the earlier years of your finance agreement is mostly interest, so you get to include that as an expense. But in the later years, it's mostly equity. Your payments are mostly equity, and you
Right.
don't get to exclude that. So now you got to have a tax strategy on how you're going to play all that and make sure that you put your revenue and your expenses together so that you minimize your taxable events and the tax effect of that. Those things determine what kind of tax preparer you want to get.
Well,
I was
that,
gonna say something, but
Huh?
I'm a host, so I'm not gonna say that. Anyway, so great answer, Jeffrey. Wonderful answer.
Hmm.
Which brings me into, have you seen people get so protective of their coins? And I know you talked about knowing the difference between a CPA and an accountant, and some people just want to now do it themselves. Have you seen people that actually end up losing, I mean, a bunch of money with like penalties or audits because, I mean, they were too proud to just follow the rules?
Well, by the time the rules come into play, you've already done the damage, meaning you file taxes at the end of the year. And if you think about it, a tax preparation
Mm-hmm.
project is what I like to call it. It's really a recapitulation of what you've done throughout the year. So the damage is done. If you don't have a tax strategy and you're selfish, or if you're a giver, it doesn't really matter because it's all going to show at the end of the year, and there's not a whole lot you can do at the end of the year.
Yes.
I get calls all the time at the end of the year. Jeff, what can I do to reduce the amount of taxes I owe? What kind of contribution should I make? And I say, make a contribution to the IRS. You get dollar for dollar. There's no better contribution. Pay your taxes. Now, depending on how you come upon your money, will determine how you treat said money. Because we all know that work, the definition of work is effort over time. So if you're getting paid for your work, then the value of your dollar means more to you because you know you earned it.
Mm.
And so to give it away is to give away your time, not necessarily the money. Unless, of course, I'm a career gambler and I was sitting, I was gambling every day. Like you see the people at the gas station, they getting those scratch offs every day. When they win, they're not looking to share that money because they probably
Right.
spent just as much to get it. to earn it. And so and that's what it really is. You know, they say time is money and money is time. What did it cost you to get it?
Right.
And what effort did it take for you to get it? Um, One of the biggest mistakes a lot of athletes make is when they get a lot of money, they don't know what to do with it. They become givers, or they'll just become spenders, and it's because they have a natural gift that allows them to make money. Now they know what it costs. They know what their time effort was in practice and working out and staying in shape. But to be able to play that child's game and make that kind of money, sometimes it doesn't it doesn't resonate with them, that because they've always practiced. They practiced for years and never got paid. They did it for years before they even got to high school. They did it for years. So practice becomes just something that it becomes a necessary evil. But when they get paid to play that game, sometimes they don't realize that they have to include all that effort in the summation of their work, and then they become very loose with their money. But you got some that are very frugal, and that just comes from, they always say money makes you more who you are.
Mm-hmm.
So if you frugal over your $10,000 a year job, you get $1 million, you're probably gonna be even more frugal. If you got a $10,000 a year job and you always looking for ways to spend it, or you got somebody that you gotta take care of, you get $1 million, you're gonna do the same thing. You gotta have people in your circle that want to see you win, and then you won't be coined as being selfish when you're actually frugal. And sometimes people won't let you give them something they can't pay back.
Mm-hmm.
And those are people who are also probably frugal and like-minded. They understand what it takes for you to make your money. They're not gonna ask you for it. They may ask you for some advice. They may ask you to partner with them on some ideas that they have, but they're not just gonna flat out ask you for no money like that. So you can be selfish with money because it's a representation of your time, and you're gonna be held accountable for what you do with it by the federal government. So it's like,
Don't
it's one
have
of
a
those
button.
things where they're not gonna line up with you to pay your taxes. They're not gonna line up. You
Right.
can't write them off. You can't. You know what I mean? So it's like
They're not dependents.
the a
Right.
dollar given is worth $1 plus, because if you give $1 away, you still got to pay taxes on that dollar. So, and it's not like you're gonna say, somebody asks you, "Can I borrow $100?" You ain't gonna say, "Okay, well, here's $75. I'm gonna take six dollars and send it to the state for you under your social, and I'm gonna take the rest of it and send it to the IRS for you under your social, because you know that." Then I'm gonna keep another 25 for giving it to you, because I still gotta report that dollar on my tax. After a while, it's like somebody asks you for 100, you give them 50, and then you do something else with the other money if you're smart. But I mean, that's what I'm talking about. So when you earn your money, then you know what it's worth to you. You know how to value it appropriately. If you're paying attention, some people don't pay attention.
We're close to April 15th. I mean, that's the ding ding ding. That's when
Hmm.
it's done. So the question is, I would love to know your thoughts on the Big Beautiful Bill Act, as well as the new credits that are out. Any tax breaks or tips for people who are probably watching this and are like, I might need to go ahead and file my taxes, or maybe I'm behind. Or what are your thoughts on all of that that's going on right now?
From a personal tax standpoint, one of the things the Big Beautiful Bill did was it increased the standard deduction for single filers and married filers. Almost the married standard deduction is like twice the single one. That wasn't always the ratio. And then they also increased child tax credits, and they made those credits refundable. There were a couple of years, because our government likes to play games with the tax structure. And I tell people all the time, I say, the tax rate during the year never equals the tax tables at the end of the year. So if you're getting more in your check during the year because they reduced taxes, they didn't change that table at the end of the year. That means you're going to get less back in the refund, or even possibly owe.
Mm,
So what the Big Beautiful Bill did was they worked on that table side. I
mm-hmm.
don't know if they worked on the withholding side. As a matter of fact, I don't think there was anything about changing the withholding tables. They talked about changing the standard deduction tax credits and things like that.
Mm-hmm.
So you're going to feel it in one place or the other. It's going to feel
Mm-hmm.
like you're getting a larger refund, and that's all well and good. But during the year, your check might have felt a little less, or it might have felt the same. But you
Mm-hmm.
may be getting more of a refund. And then they kind of increased. they widen the tax base. The best way for me to say it is like, when I say widen, it's like there's less taxes being calculated on small, on lower incomes, right? But then they also added some incentives for some of the larger tax structures.
Mm-hmm.
I'm trying to think of some of the things that they did that kind of helped out people with a lot of money. Inheritance. There used to be a tax on certain amounts of inheritance. Well, they raised it. They're trying to also, they're proposing that there's no cap on what you can inherit,
Oh, okay.
tax free. Right. So now you got people moving money. And I always tell people, when I say moving money, it's like that's what creates a taxable event, the movement
Mm.
of money. And that's why if you have a dollar and you save it and you don't move it, it might not earn as much interest as money that you invest and allow somebody else to play with it, but
Mm-hmm.
it's your dollar. And 9 times out of 10, if you don't move it, even that nominal interest rate that you're getting, that small interest rate, is worth more than moving it and letting somebody else make 14% and give you 2. And
Ooh.
then when you report that income, then that's taxable too. So when you got savings, they're not going to tax you on what you got in savings. So
Mm-hmm.
sometimes there are a lot of old people, they believe in savings. And if you're paying attention, you'll notice that a lot of old people have money. You be like, oh, they just didn't spend no money. They didn't spend no money. That's because they didn't move it. It's
Mm.
like the taxes come into play when you move it, and I don't care which way you move it. If you spend it, it's gonna get taxed. If you invest it, it's gonna get taxed. Okay, there's gonna be a fee to invest it, and then whatever you earn, that's gonna get taxed. If
Mm-hmm.
you put it in a CD or a time, something like a 401k or a 403b or even a retirement account, take it out early if you want to. They're gonna get you. So it's like when you move money, that's what creates taxable events. So, but that has to be part of your monetary strategy. You have to look at it. You got to pay attention. So some people believe in investing,
Mm-hmm.
but they look at investing as gambling, and they'll say, "Well, I'm only going to invest when I'm willing to lose." And so that changes the whole way you think about it. Um, or some people will invest in property. I'm going to invest in only stuff that's going to appreciate. Some people buy cars. Well, I mean, that's going to depreciate when you drive it off the lot. Unless,
Right.
of course, you get something that's particularly special and you keep it a long time. Then it can make money. So it's just all in whatever your monetary policy is. The big beautiful bill, though, specifically, is making tax time a little more, I guess you say, rewarding to persons with lower income and rewarding the people with a lot of income because they're removing some of those taxable events for some of those people with millions of dollars to donate, invest, or leave to their children.
What are the major deadlines that people are staring at right now from either a personal or a corporate standpoint? Because people love to talk about, oh, I haven't done this, or I haven't done that, or I have time. Do people really have time?
Yeah, they do and they don't. The
Mm.
first major deadline was March the 15th.
Ooh,
If
that's
you
small.
have a if you have a corporation and it's a multi-member corporation, not a single member corporation, then March 15th is your stop end date. And depending on how much money your corporation made, that determines what kind of tax return you have to file and what's included in it. And I say that because a lot of people say, I'm gonna start me an LLC, I'm gonna give me an LLC, or me and my friends, we're gonna start an investment group, we're gonna do an LLC, and that's all well and good. Or I'm gonna do this partnership. Well, a partnership can be filed on your personal return. So that means your deadline is still April 15th. A
Mm.
single member LLC can be filed on your personal return on a Schedule C. So that kind of pushes the deadline to April 15th. Multi-member a partnership can be filed on a personal return. That pushes the deadline to April 15th. However, that partnership return has to be done by March the 15th so you can get the K1s to show each partner how much they made in their partnership, and that goes filing on the 15th. Now, if you do not file your corporate return on the 15th each month, it depends on whether it's a Schedule C. If it's a C corp, you're talking about $250 per member per month. That's what the penalty is. unless you file for an extension. So it's kind of like, yeah, so you got to get that extension in by March 15th. If you don't get that extension in by March 15th, corporations, you need to file by the 30th. If you're going to be late, don't be more than 15 days late. Don't let it go into the next month. It's okay to file on the 16th, 17th, 18th. I won't even say it's okay. It's just less damages if you go ahead on and file as soon as you can if you can't file on time. Same thing go for personal returns. If you don't file on the 15th, they'll get you with a late filing penalty only if you owe. But if you don't owe, they're just gonna send you your money. So it's one of those things. So a lot of times as a taxpayer, you need to know what your situation is. You
Mm-hmm.
need if you know you owe taxes, you're not the person to wait to the last minute to file your taxes. You should never be. You should be there January 1st. I know the program ain't out yet, but let's get this together now so I know where I am. January. I mean, you should be running your tax preparer down if you know that you owe. And when I say know that you owe,
Mm-hmm.
if you took an early distribution of some investment you had, if you made a bunch of money on a 1099 and you know they didn't withhold no taxes, you're the last person that needs to be holding on to your tax stuff until March 15th or 17th or 8th or even. So, yes, deadlines are important. April 15th is very important. If you can't get your stuff together by April 15th, file an extension. And you can file an extension yourself. You don't have to wait for your tax preparer to do it because 9 times out of 10, your tax preparer is busy doing taxes that he has information to do for. So if you call him, especially on April 15th or 14th, or anytime in April, time I need an extension, he's going to be mad with you because he's closing off. He's trying to get the ones who got the information in on time. He's trying to get them done by the 15th, and here you come with something. Another thing tax preparers don't like, personal ones anyway,
Mm-hmm.
is when you don't file and then you show up late in the next year with 2 years, needing 2 years done at one time, and you late or you pushing toward the deadline.
Yeah.
That's what we call a project. Some tax preparers were like, "Don't give me no projects," or if you give me a project like that, I'm gonna charge you double because now I have to spend my time working on yours, which could have been done
Mm-hmm.
in lieu of working on someone who has their stuff together.
Mm-hmm.
And so now you start talking about time as a factor with money. So if I got to spend dedicated time to your tax return, and it's going to take me 2 or 3 or 4 days to do it, and in 2 or 3 or 4 days, I could have done 15 tax returns where people had their stuff together. So you
Mm-hmm.
gonna pay? There's an opportunity cost for me to do your taxes.
Mm-hmm.
Ooh.
So you gonna pay more for that. So and then you still gonna be paying less than what you would pay if you filed it late. So it's kind of like you might as well pay me what I asked you for. I'm gonna save you some. I'm gonna save you a couple $1,000s by dedicating this time to it. So
Right.
my fee structure is gonna change a little bit. And then they want to say, "Oh, that's not fair." Blah blah blah. It's not fair to you, but it's fair to your preparer, because you got to think about it this way. Also, if you have a preparer that's worth his salt, he's gonna have a lot of clients that he's got to
Mm-hmm.
see between January 30th, because everybody don't get their stuff till the end of January,
Mm-hmm.
Mm-hmm.
and April 15th. So you really got February, March. You really got like 60, 75 days to do sometimes 300 people's tax return. That's not the time to be beating his door down.
Right.
If you have a business and you don't have an accountant where you're doing quarterly reports yourself, if you haven't done that, then bringing an annual report to be done by your tax preparer before you file is disrespectful.
Mm.
Not calling your tax preparer at the end of March, the end of June, the end of September, saying, "Hey, look at my bank statements. Where am I? Do I need to be making some estimated payments, or what? Am I on track, or blah blah blah." Not having these little strategy meetings with your tax preparer and pay him for that. Then it's disrespectful to show up at the end of the year with 12 months of stuff, expecting him to wave a magic wand and knock your stuff out like that. That's not how that happens. That's not
Come
how
on,
that
Jada
happens.
Kiss.
Huh?
I said, come on, Jada Kiss, knock yourself
No,
out.
it just funny. It just,
Sorry, I'm trying to.
It just doesn't happen like that. And I just wish that more people took that into consideration, that their tax preparer is probably seeing all of his clients within 75 days.
Mm.
And if he has more than 75 people, then you can't take up a day's worth of his time. And it's less than that if he's a person that has a family and he's got weekends and he goes to church and all that kind of stuff. So you got to be on top of your stuff. You got to pay attention to your personal monetary policy, your tax strategy, and your motion, your cash flow. You got to know when you're making money that needs to be considered for tax season, before tax season, not at tax season.
I gotta say something because you said a mouthful. Y'all better quit stressing my man out because
No,
y'all.
Bad.
I'm gonna just say this as the wife of an accountant. Y'all, y'all stop stressing your tax preparer out. Don't call him 15,000 times. The phone gonna only ring one person at a time. I mean, then it's gonna kick in for somebody else. The man
leave a
is
mess. Leave a message. Send a
leave a
text.
message after the beep. R. Kelly, even though we leaving him alone, we leaving him somewhere else. But leave a message. Send an email. Send Heg with Divert. I don't know what you have to do. If you know you are behind, honey, don't come be bobbing on the phone mad at your preparer. Be mad at yourself. Okay? Because you just didn't put the time in. You weren't thinking about it. And you think that it's his fault. It's not his fault. What were you doing during the year? Snookums? Nothing. Nothing. They think he's a bail bondsman. I'm sorry, I'm putting my own personal into this. But they
Stop.
think Jeffrey is a bail bondsman. Like, you're going to jail. They taking me to jail. Like, that's what they think. They're like, get me out of this. And Jeff is like, well, what were you doing? What do you want me to do? Like, I'm confused. Or people will call him just rat-a-tat-tatting. And it's like, oh, when did you get a vocal box? Why you trying to holler at my man? I don't like that.
Tara.
I'm sorry.
All right.
We're back. Okay. Thank you, Jeffrey. That was a wonderful answer. My next question is, everybody think they a tax preparer out here. H&R Block, TurboTax, everybody and their mama see all of these little posts up at the Walmart, and now they think they're a preparer because they can download a little program or two. So I would love to know from you, what is like the do's and the don'ts or the red flags? Because there's so many people out here. I mean, even people do accounting through the jail. So I heard people
Yeah.
just be giving everybody the information. Girl, yes, there are people in the jail who do accounting. Like, they want people to send their information. They do the accounting. They go ahead and get
Yeah,
their
those are
refund.
scam artists. Those
And
are
that's why they're
scammers.
in the jail cell.
Yeah,
Because
those
they're
are
I'm like,
scammers.
wait, who? I thought like maybe they,
I-
you know, like while they're locked up, you know how they could
This
get their
isn't a
degrees
reform
or something.
program,
Oh, it's
sweetie.
not that.
It's
Oh,
a scam.
Yeah, you don't want to fool with that. But it also, you have to be careful of thinking your tax situation should mirror somebody else's. I have people that will tell me all the time, "Oh, my cousin, she got 3 kids. She got back X amount of dollars. Blah blah blah." I'm like, well, I don't know. Did she work? What did they withhold on her check?
Ooh.
You know, she had how many kids? How old are they? Because after 16, you're not gonna get that additional child tax credit. So you got people thinking they got because they got 3 kids and they all of them 16 or older, or one of them's in college, so they're supposed to get with the person that has children that are under 16. And that's not how that works. So then they get mad. Well, my friend got all this money back, and her tax preparer said he could give me the same thing. It depends. There's more details that go into the calculation than a lot of people think. And having kids will get you a child tax credit. It will not get you an additional child tax credit if they're over 16. If they're if they're 21 and they're not in school, there ain't a whole lot you can do with that person. You know, you can claim them, but you just and they don't even do personal exemptions anymore. So there's no point in claiming somebody that's over 21. They need to be filing their own taxes. They need to get a job.
Message.
Pretty
That's
much.
good. So I talk to a lot of people that everybody knows that my husband's an accountant. I'm always like, oh, this is what my husband does. And they be like, that's good because I haven't filed my taxes in 22 years. I am exaggerating. Okay. But a lot of times people will go, it's been about 5 years and maybe during COVID. And I'll be like, oh, how do you say that with a straight face? So, Jeffrey, what do people do? Because I know somebody is watching this doing like this. Like, and it's no shade, baby. Just get your life together. This is what he's here for. So, what
Well,
happens if you
if
haven't
they
filed in years with an S,
you
plural?
can you can only get a refund in the last 3 years. So if you were due a refund 4 years ago, 5 years ago, and you didn't file, you're not getting that back. If
Ooh,
you owe the IRS money 7 years ago, 5 years ago, they want that money. So this
ooh,
is the point to make.
give me
If
that.
you let those years go by without filing and you would do a refund, you're not gonna get it. If you let those earlier, those later years go by, like 4, 5, and 6 years go by, and you haven't filed, and you owe them, they're gonna get that money. In a lot of cases, the IRS, and it's not even like they're waiting 3 years, but after 3 years, if you haven't filed, you will get a letter saying that you didn't file, and they will do the tax return for you. And in that, they're just gonna look at how much you made, calculate the tax, and that's your bill.
Ooh,
Plus non-filing payment, late payment penalty, all of that. Now, as a taxpayer, you have the right to file your tax return. So if you get one of those letters and you know you didn't file and you got your W-2 and you know that you don't owe that much money,
mm-hmm.
you might owe some, but not that much, then you need to go ahead and file that return. If you do a refund, you file it. You're not going to get the refund, but you don't owe that money. So if it's been more than 3 years, then you definitely need to get on it and get it filed.
Mm-hmm. Now, is there ever a time you can just, call the IRS and be like, I'm sorry?
No, for real. Yeah.
If you don't owe, if you owe them
Oh,
some money, if you owe them some money, they want it, plus penalties and interest. Now you can ask for a waiver of a penalty
oh,
if this is like your first time not filing. Like let's say you filed for 30 years straight, and then 1 year you didn't file, another year you didn't file, another year you didn't file, and you get the letter and you go, oh, I sorry, I got dementia now. I didn't file my tax. You can get it waived, or if it's like your first time not filing, seriously, they take that into consideration.
yeah.
But if you're a repeat offender of not
Mhm.
filing, they're not gonna cut you no slack. They're gonna want the money. They're gonna talk about liens. They're gonna talk about all that. Another thing is the IRS will not call you. So when somebody say, "Oh, the IRS called my house," no, they didn't. The IRS don't make phone calls.
What?
Good
If
point.
somebody calls you and say, "Hello, this is the IRS, and I'm calling because you just hang up. Don't give
No,
them your
but for real,
social.
that trap
It's
is, you're right.
true.
So they'll always send a letter in the mail. That's how
They're
you
gonna
know
send
it's,
you a letter.
yeah.
They're gonna send you a letter, and if it's serious, they're gonna send you a certified letter.
Ah.
Oh,
If they want to audit you, they're gonna send you a package.
oh,
It's gonna be about this big, and it's gonna be certified. So when you get these little letters, a lot of times, sometimes the letter will say you owe X amount. We intend to levy or seize property. They want you to file. They want you to be compliant. This is another thing. The IRS are not the big bad guys. They want you to be compliant.
mhm.
And that's another thing I always tell people. You cannot have your tax stuff together by April 15th. I'll be like, file what you got.
Mm,
Oh.
mhm,
So you can
mhm.
always run it back.
Because you can run it back. You can make an amendment. But if you don't file on time, you got late. Especially if you know you probably don't owe, file
Mhm.
it. Because if you're going to just add to your not owing position by
What's
doing
the
an
worst that
amendment,
can
then there's
happen?
no harm, no foul. But if you know you owe and you missing one document, file what you got. Come
Mm.
back and amend it later because
Hmm.
9 times out of 10, if you owe, you file what you have, you do the payment agreement, or you go ahead and you pay that, and then another document comes in and now you owe some more money, then all you owe is the additional tax. You don't owe all that
Mm-hmm.
Extra.
with the penalties and interest. So I'm always like, just file it on time. Pay your preparer. Don't
Mm.
try to make your money on your preparer. A lot of people be like, "Oh, you charge too much. Oh, you went up $10." Well, I'm like,
Not
I
$10.
I, I just saved you 2,000.
Ooh.
You know,
Right.
so you got the value. You know, and sometimes it's important to know. Not only you have to value your clients as a preparer. I value all of my clients, but if I ever get the indication that they don't value me, it's hard for me to be objective. It's hard for
Mm.
me to it's hard for me to sit up on April the 12th and say, I haven't heard from JoJo today. I ain't heard from Mr. Simmons this year. Let me call him and make sure he's all right. Hey, I didn't hear from you. What? Oh, you got your taxes done already? I'm just wanting to make sure you got them done. Click.
Mm.
Because if you are a good client, and by a good client, I mean you understand your situation before you come to your preparer. You're not expecting a magic trick. You're not looking for a savior. I am not your savior. So what you need to do is know your situation and be honest with your preparer and pay his fee. Because 9 times out of 10, he's not charging you because of who you are. He's charging you for what because of what he had to do. Most
Mm-hmm.
preparers are registered with the IRS, and the IRS keeps track of every registered tax preparer and how many tax returns they do and who they did tax returns for. And so I'm inclined to believe that they're looking at those preparers' tax returns to see if their income lines up with how many tax returns they prepared. Every tax form has a time schedule telling you how much time it should take to do that particular tax form.
Mm.
Mm.
So I'm not saying that tax preparer fees are normalized across the industry. You're going to pay a CPA more than you pay H&R Block. But when it comes to the forms that you have prepared, that registered tax preparer is attached to your tax filing, and they know what forms you have prepared. So if I do a tax return and he got 10 rental properties, he got 3 jobs, he got 4 kids, and he only paid $150 to get his tax return done, the IRS knows that, and they know that about me as well.
Mm.
So it's like accountability is what tax season is all about. You being
Mm.
accountable based on your income and how you spend your money. The IRS taxes the movement of money. The IRS values you buying or you investing in the government. And the way you invest in the government is you buy property.
Mm.
The way you invest in the government, you buy things that have a tax base that they can list and tax. If you have a business, you got a business tax form you got to fill out every year. They want to see that you are actively supporting society. And when you do that, there's a tax break in there for you somewhere. But if you like
Mm.
to make all your money and blow it, and then at tax time you try to pretend like you ain't got the money to pay your taxes, they're not trying to hear that because you don't have
Mm.
anything to show that you're being responsible and accountable with your money.
You speak to so many people, especially this time of the year.
Mm.
Do things ever get, and granted, you don't have to use no names, but do things ever get kind of messy during tax season? You know, people got married, they got my
Mm.
divorce,
Oh, always.
types of,
Yeah.
ooh, I'm taking the baby for the taxes and doing this. Like,
Mm.
does it ever get
Yeah.
real murky and you got to be like, hey, 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 I'm just a
Well, I
preparer.
always tell people if they have kids in common and they're trying to decide who should claim the kids, they should have the same tax preparer. Don't
Mm-hmm.
one of y'all run off and get JoJo to do your taxes, and then the other one run off and go to TurboTax because they're not getting the same tax advice, and so they
Mm.
could be missing out in some cases. I just had a couple do that. The young lady she worked some, but she claimed 3 kids. Well, the man he had his own business and he worked more,
Oh.
Mm.
and I was like, well, you would have got more of a credit for those kids than she did. Or one of them is not getting the additional child tax credit because you only get 2 of those. So she should at least given you 1 kid to claim. So
Mm.
yeah, it gets messy. That and then I've seen couples fight over $1,200, and
Mm.
I can't figure that one out. I've seen where the man's W-2 shows that he paid taxes on his income correctly and the wife's did not, but she wants the refund to come to her bank account. And depending on whatever else is going on in that house, he'll say, okay. And sometimes I have guys tell me, well, I knew she was going to take the refund. I ain't worried about it. I know that's she wanted, mama want to go shopping. Mama want to go buy some, that's her. I let her
Oh,
go ahead on and have it,
okay, Big
But he
Daddy.
knows that
No.
that's his money in the form of that refund. I've seen tax season be the impetus for an ugly breakup. I've seen that more often than not. Um, and some of these guys are good guys. They just have real, particular jobs in the military. Like I know this one guy. He comes back from a tour, and all of his credit cards was maxed out. Bills hadn't been paid, and his wife was back at her mama house when he got back. She wasn't even, soldiers come home and their loved ones are waiting for them on the tarmac. She was 4 states away because she knew she had messed up.
He did not care.
Phone is ringing off the hook from all his creditors. He literally had to get out of the military because his minimum payments was more than what he was making.
Oh,
And in the
you can't
military as
do
an
that.
officer, you can't file bankruptcy if you're an officer because that shows you just are not
Delta
accountable.
skeleton.
You can't be
Yeah.
trusted. Tax season always kind of exposes couples and their financial policies, their monetary policy, and their tax strategy if they have one or not. Um, and in some cases, I've been able to mend a few fences. I
Oh,
can say that. I've been able to pull them both in and massage the numbers and make everybody happy in some cases you can't. Um, and that's the sad part about it is that it's really not over a lot of money most of the time. It's really not a
at
lot of money.
$1,200.
I've seen the $1,200. I've seen money mismanagement being exposed during tax time. There was this one guy, child support came for his refund on a child that the wife didn't know he had.
Well, gotta go. This has been nice, Jeffrey. What?
Wow.
Yo, I never forget that. I was like, I didn't even know he had. It was a child that was younger than the ones they had.
Which
Yeah,
that's why nobody knew.
that's why nobody knew. I mean, I might be giving up the game because ladies don't like to mess around with cars. But sometimes you got to run through that truck. Don't put my email address up here because I'm gonna get lynched. I'm gonna get lynched by black people. It's gonna be they gonna find me. Shut up.
Yeah,
I'm gonna
be
shut
quiet,
up because
Jeff.
I'm a happily
That's good.
married man, and there's some of my comrades are still out there running and gunning. They don't need this kind of information to get out. That's the whole thing. You don't wait till tax time to be accountable and get your affairs in order. Know where you at. What a person is with money is just who they are.
A good way to put it. Don't wait until it's time to be accountable to try to be accountable. Now,
Right.
it's gonna
Well,
show
yeah.
its face. You're right. That W-2, that 1099,
Mm-hmm.
the K elemental P that you be talking about, none of it lies. The cards never lie.
Right.
Okay, Carmen says.
And the
Carbon
W
hip
twos
hopper.
got and look, the W twos have codes on them.
Oh,
And you're thinking, oh, this code D, that's a deferred compensation plan like a 401k, okay. But they got the code list is this long. Child support's on there, alimony, all that's on there. Where their money is going out of their check is gonna show up on that W-2.
ew.
That's why tax time is really messy. Because like I said, a lot of stuff comes out that doesn't come out in the day to day.
Were they filing jointly, and so it affected her money and income and refund and all that stuff too?
Well, yeah, they were filing jointly. What
Okay.
happened was is I think there was a gap in his employment and he got behind. And so when they filed and it was time for them to get a refund, child support took his refund.
Got it.
He really was doing what he was supposed to do. You see that Department of Treasury envelope and ain't no checking it, opening it up. Your refund was applied to child support such and such county, blah blah blah. Yeah,
And they kids was in the house with them. Oh,
yeah.
Oh,
that's an
that's
episode of
how
Love and Hip Hop.
Money makes the person more who they are.
Mm,
So it's
it
it's,
would have
it's
came
cool.
out anyway.
It's cool to
it
be
would have came
accountable.
out.
Tax
Yeah.
season. Tax season is the reveal, the grand
Mm,
reveal.
mm.
Married filing separate status is the same as a single. I mean, the standard deduction is the same as a single standard deduction.
Mhm.
And so
Mm-hmm.
married filing joint is twice that amount. So
Crazy.
yeah,
Mm-hmm.
file your taxes, pay your taxes, and pay your preparer. You got one. Most people want to give their information and they want to turn around really fast, and I'm like, you don't want that. Sometimes you want your preparer to spend a little time with your tax return.
Yeah.
Give them time to sleep on it a couple of nights because sometimes, because they're doing so many, or doing someone else's tax return can help you with someone else's tax return. You might learn something on this tax return that can benefit another
Mhm.
taxpayer. And so sometimes you want to give them time to do it, but and that's why you shouldn't wait till the last minute to give it to him because now he doesn't have time to do due diligence. Now you got to hurry up, put in what you gave him. Hey, that's what you owe. You got to get it in. I can do a
And
payment
that's why
agreement
you
for
might
you.
have to do an amendment later.
Right. You
Because
may have
you
to do an
didn't get
amendment
everything.
later, or you might have to do a payment agreement. Or if you'd
Mm,
have got this to me sooner, then I would have had time to investigate some things for you and show you some things that you could have taken advantage of. No two people's tax situation is the same,
mm-hmm.
so it's like it's always a new story. So it's not boring, and it does tell a story. So maybe it does speak to my desire to be a writer, something like this. It's like a new book.
Well, now
Yeah.
that's a
It
roundabout
really,
way to bring it all home. Yeah,
yeah,
well,
it's
Yeah.
like a new book.
I think that would be a great story. You
you
have
should
years of
write a book
expertise.
on like right
You
all
should do
your
a book.
experience, the crazy stuff that you have seen over the years as a tax pro. Obviously, make change names and stuff like
Right.
that. But that would be yeah. I mean,
That
just
would be
listening
a
to it right now,
bestseller.
I'm like, good grief! Like, oh yeah, you wrote a book on that,
Yeah.
and like, yeah, just lessons, to look
Hmm.
Mm.
out for.
Lessons from the preparer.
I
Ooh,
don't even know it.
ooh.
I'm trying to think what section that would be in the bookstore. Like, it ain't self
Mm.
help.
I guess it's
Yeah.
it's
Or just
no, I mean it's nonfiction. I mean, because these are real
nonfiction.
stories. You're just
Mm-hmm.
yeah.
Exactly. And then you're also giving tips from the story, what they could do
Mm-hmm.
better. You know,
So that's
yeah.
self
Yeah, there's a
help
lot of
type too.
those.
Yeah, it can fall in different.
Yeah.
We go offline. We gonna
Yeah.
look that up. I like that.
Mhm. I
But
like
man,
that
well,
too.
this
That's
was
new.
informative. Is all get it. Like
Yeah.
I already found out, but man, like now there's certain things like even for you were talking about, retirement and certain investments and moving the money. And if I did want to, start a business down the line, like things for me to think about as I progress and I want to, gain more assets and I really didn't even think about that. And so, like you said, the more money you make, you should be thinking ahead and thinking to your future
Yeah.
self of different. So I like this. Really just helped me. So I loved it.
Yeah, and on those corporations, when you start your own business, of course, if you're a sole proprietor, you file it on a Schedule C on your personal return. But once you get to making an amount of money in your business that's going to change your tax bracket on your earned income, like if you work in a job and you got a business, it's
Mm-hmm.
okay if your side business is making 20,000, 40,000. But once that thing starts to move to where it makes exposes your W-2 income to more taxes, because you could be like in a 10% tax bracket on your W-2. You could be making 50,000, right? And then making 200,000 in your side business. So now that 50,000 wasn't taxed right. It looks at it as 250,000. And so that's a whole nother tax bracket. So I always tell people that once you can start a
Once you.
business, you can be a sole proprietor, you can be a single member LLC, but if it starts to make hundreds of thousands of dollars, then you're gonna have to elect to be a C corp
C Corp.
and let
Mm.
that be a separate entity altogether, and it has its own taxes. It doesn't affect your personal taxes because you don't want
Mm-hmm.
all your dollars earned to be exposed to a corporate tax rate. Because the corporate tax rate right now, I think it's like 36%. I think Trump was talking about changing that, but I got to look at that again. But that
Yeesh.
corporate tax rate is always high.
Mm. Because they know you got
So,
it.
yeah, but
Right.
your
You're
corporation should be making money like that. That's
right.
another
Yeah.
thing.
So,
The
yeah.
taxes tell you what to do, Me and my brother used to talk about it all the time. We used to read the tax code, and this is how I knew we were different. We would read the tax code, and we would be laughing, because we were like, "Oh yeah, so you can put your business on your personal return, if you ain't making no money." It's like they ain't worried about you. You
Right.
made $15,000 selling T-shirts. Okay, yeah, put that on your personal tax return. We taxed that at the same rate. It didn't even move much. But then
Mm-hmm.
when you start making hundreds of thousands, you might want to
Mm-hmm.
make that a separate entity
Yeah.
and have its own taxes, and you file by March 15th and all
Mm-hmm.
that stuff,
Mm-hmm.
and you let that, and then that way also, if something happens in your business, God forbid that you're sued, it doesn't attach itself to you. Now you're
Mm-hmm.
separate from your business. You have a separate entity there. And then you can limit the liability of your business, yes, but still, you don't want you and your business to be one entity when you
Right.
Right.
making that kind of money. Because nine
Right.
times out of ten, when you making that kind of money, somebody coming for you. I don't care if it's the
Somebody
burglars or
wants
the
that
IRS.
money.
That's right. So you need to also what you want to secure the financial future of your entity, your individual and your business. So when you're
Mm-hmm.
making money in your business like that, you need to understand that people are watching. The streets are watching. The IRS is watching. And so when they come, you want them to come for your business. If they're gonna come for your business, come for my business. Don't
For
come
the
for my people.
business.
Yeah,
We
don't
got
come for my
insurance over
people.
there.
Don't come for my
Right.
spouse. Don't come for my dependents.
Right.
Just come for my business, and we'll settle
Mm-hmm.
up
Mm-hmm.
over here. But as long as you got that business in a sole proprietor or S corp situation, and it's making money, and somebody comes for your business, as long as it's viewed as a single entity along with you, then it can affect you, your spouse,
Good.
your children's
House,
financial
everything.
policy and future. Right, yo, how all that gets tied up in there. So that's there is a money amount that separates you from your business,
Mm-hmm.
um, and there is a time to separate you from your business as well. And
Mm-hmm.
that's when your business can be culpable or could be open to lawsuit. And
Mm-hmm.
so you don't want that attached to you personally. You don't want
Right.
it attached to your spouse or your kids or your property or your cars or anything else you got going on personally. You
Mm-hmm.
want it to stay in the business. And so, yeah.
Mm.
Jeffrey, you so smart. I tell him that all the time, but he's so smart. All them SAT words. He's so smart.
Yeah.
Yeah. He's so smart. Y'all see why I said yes? I said yes. Why
But
not?
yeah,
Okay.
I don't know if that is there something else that we had in here that we wanted to talk about?
No, that was awesome. I
That was
feel like we're
it.
gonna have you
Yeah.
back because you are, when I tell people
Right.
you are very smart, it's not me just tooting your horn, but it's accurate. You're a wealth of information and we appreciate
Facts.
your expertise. We know this is a busy, busy, super busy time for you. So thank you so much for taking time out of your very busy schedule. Even though I know you would do it for me. I appreciate it, but thank you so much. And I really feel like we'll have you back on because
Oh,
you
absolutely.
covered like so many different sectors and categories,
Oh,
and
yes.
we appreciate it. So if y'all have any questions, please comment down below. Jeffrey, where can people email you at if they have any questions directly? Let them know.
Jeff Blackwell MBA at gmail.com. And that's MBA, not MBA. I'm only 5'9".
You tall. You taller than
I see
me.
I see somebody laughing because I'm like, yeah, I'm 5'9", hanging upside down with,
Oh, oh.
with a weighted
Oh.
vest on, hanging upside down.
But yes, y'all, comment down below. Thank you again, JB. We really appreciate you. And we know we'll have you back because I can just see the comments going right now because there
Oh,
were so
facts.
many
We
things
might.
you hit on that I
Yeah.
know people would be shocked to know, and I bet they did not know. So thank y'all so much for watching. We really appreciate it. We'll be back for another
Yep.
episode next week. We'll see y'all on the next one. Bye.
Bye. Thanks for having me.